Well, it was a big win for American retailers. Sales climbing up nearly 5 percentage points and 5.5% so far for the year. Holiday shopping is on fire. But is there such a thing as being too good? Here to help explain, Moody's chief economist, John Lonski. And John, between that economic data out of China and Europe and then our strong economic data, one of the first things that happened this morning is the dollar, the DXY index, soaring to highs for the year. In fact, the highest since the summer of last year. I think that's putting as much pressure on the market, particularly these multinationals, as anything else. So it's kind of strange that we might be doing too good.
Well, that's true, and especially we would even be more worried if the Fed was talking about an overheating of the economy. Now, it could help to steady the dollar, maybe push the dollar a little bit lower later in 2019 if the Fed decides to cool it on the interest rate front.
That's what everyone's been saying, and now, of course, it's become sort of this de facto mano a mano. So if Jay Powell doesn't hike rates next week, he's a wimp.
Yeah. On the dollar front, too, let's add, it's not only a question of China doing poorly, the worst retail sales growth since 2002, it's also Europe. In Europe, we find that auto sales are up by less than 1% year over year. So we have these problems overseas. The Fed's got to recognize these problems. We don't need a stronger dollar. What we need a Fed that helps keep the U.S. economy growing at a rapid enough pace to keep the world economy from falling off the cliff.
And here at home, where the fragility is also associated with interest rates, right? So, the mortgages spiking hurt the housing market. We see where new car sales are really limping along. The Fed sees this.
Hopefully they do, and that's of concern to the marketplace. What is it? Housing sector share prices for the year to date are down 27%. They've gotten clobbered. That tells me that fairly soon we are going to see that 10-year Treasury yield move lower. I think by early next year, the 10-year Treasury yield no higher than 2 3/4%.
Will it invert?
Well, we have a slight inversion right now between the 5-year Treasury
right, but the
and the
10
3-year Treasury.
And the 2.
Yeah, that's a warning sign to the Fed that they're being a little bit too tight at the short end of the yield curve, that maybe perhaps it's about time for the Fed to announce a halt to these rate hikes in order at least to prevent themselves from being forced to cut rates later in 2019.
I got to wrap it real quick. How is, for an economist, all the geopolitical stuff playing into it? Brexit, France, Italy.
Not only that, but what's going on domestically with Donald Trump and the talk that he might put him under impeachment.
I think it's pressuring the market.
Definitely it is. Yeah. Because go back to 74 and 75, Nixon's impeachment, the market got clobbered. It was down 42%, I believe, from its high at that time.
Yeah, it's ridiculous. Hey, John, always appreciate your expertise. Thank you very much.
My pleasure.